Ladies and gentlemen, good day and welcome to the Q1FY22 earnings conference call of BHEL hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mohit Kumar from DAM Capital. Thank you and over to you, sir.
Thanks, Rutuja. Good evening to all of you. On behalf of DAM Capital, we welcome you all to Q1FY22 earnings call of BHEL. We have with us Dr. Nalin Singhal, CMD, Mr. Subodh Gupta, Director Finance, Mr. Kamlesh Das, Director Engineering and R&D, Mr. Anil Kapoor, Director HR, and Mrs. Renuka Gera, Director Industrial Systems and Products. We'll start with opening remarks from the management, will be followed by Q&A. Over to you, sir.
Thank you, Mohit. A very warm welcome to all of you. I hope you and your families are healthy and safe in these difficult times. The second wave of COVID wreaked havoc all around as well as badly impacted the rebounding economy post the first wave of COVID. I'm happy to share that during the second wave of COVID, your company has supplemented the nation's efforts in combating the pandemic-related challenges. Amidst the oxygen crisis faced by the country during this time, BHEL worked on a war footing to address the oxygen demand through its various manufacturing facilities across the country. BHEL supplied over 85,000 cylinders of medical oxygen from its Bhopal and Haridwar manufacturing plants by diverting industrial oxygen from production activities and setting up infrastructure as well logistics for filling oxygen cylinders, which increased from the then existing capacity of 200 to 300 cylinders per day to reach almost 4,000 cylinders per day. Even a 40-year-old oxygen plant at Hyderabad unit, which had been shut down for over a decade, was revived for this purpose. BHEL has developed 500 liter per minute and 1000 liter per minute medical oxygen plants based on CSIR IIP PVSA technology, and the first order for the same has been delivered in June 2021. The pilot plant was manufactured within a record time of under 40 days from the signing of the technology transfer agreement, showcasing BHEL's engineering and manufacturing progress. In keeping with its ethos of being a caring employer and a responsible corporate citizen, BHEL has introduced a scheme for extending financial, medical and housing assistance to families of employees who succumbed to COVID-19. We have started the current financial year with a resolute plan for ensuring best performance from day one itself, for which efforts regarding material preparedness, etc. were initiated in Q4 of the previous year. However, despite our efforts to stay ahead, the second wave of COVID has caused widespread disruption and caused a setback in the first quarter. Post second wave, we have intensified our efforts to minimize disruption on account of any future waves of COVID through an aggressive vaccination campaign covering not just employees, but families as well as contract workers at manufacturing units and project sites. This, along with ongoing efforts to recoup the manpower at sites, will ensure improved performance in the coming quarters. This will also be assisted by the government's focus on increased capex in the infrastructure sector, as well as the PLI scheme, etc. We are resolutely focusing on leveraging all opportunities in existing business as well as for diversification. In the existing business, efforts are being ramp of business model for spares and services business for BHEL as well as non-BHEL equipment. The company is working on a number of growth and diversification initiatives, including collaboration with a global OEM for leveraging opportunities in the urban rail transportation, enhancing business through engagement with ISRO in aerospace sector, leveraging our EPC capabilities to execute complete turnkey projects for refineries and petrochemical projects, and through production-linked incentive schemes. Our recent efforts have already started bearing results. BHEL has maintained its leadership in the nuclear sector and emerged L1 bidder in the NPCIL tender for 6 into 700 megawatt turbine island package worth rupees 10,800 crores. The company has already won orders from NPCIL under its fleet procurement mode for the supply of reactor header assemblies as well as steam generators for 700 megawatt pressurized heavy water reactors to be set up at 4 locations in the country. With the execution of the order for sulfur recovery unit from IOCL Paradeep, BHEL will establish itself as a LSTK player for process packages in upcoming opportunities in the downstream oil and gas sector. The company is also developing propulsion electrics for 9,000 horsepower WAG 9H locomotives of Indian Railways. In our pursuit towards taking up engineering services as a separate business vertical, BHEL has won its first large pure design order worth rupees 85 crores from Indian Navy. To support its diversification and expansion efforts, the company has taken a number of initiatives towards strengthening its business processes, revamping project execution, creating a digitally enabled organization, as well as further improving its service and quality standards. A major exercise is currently underway to optimize costs through design optimization of major products and packages and through improved procurement efficiencies for which a dedicated cost optimization group has been set up. The company has also taken up developmental efforts in futuristic areas such as additive manufacturing, hydrogen economy, Industry 4.0, upstream solar PV value chain, coal to methanol, amongst others. A dedicated hydrogen business group has already been set up to identify and develop opportunities in the hydrogen value chain. As part of the Atmanirbhar Bharat initiative to make India self-reliant, we have identified various high-value items being imported by BHEL as well as other capital goods companies in the country. In this regard, imports and outsourced items worth rupees 1,200 crores, more than rupees 1,200 crores have been identified for indigenization and in-house manufacturing. Advanced level deliberations are also underway with other organizations in public and private sectors in areas such as oil and gas, steel, defense, mining, shipping and transport for indigenous development of items being imported by these organizations. I am happy to share that BHEL is already executing several developmental orders for the same. Coming to the financial performance, the top line in Q1FY22 has improved significantly at rupees 2,724 crores, up by 44% from the lower base of rupees 1,897 crores in Q1FY21, despite the second wave of COVID. While on one hand, the company is trying to enhance the volume of operations, on the other hand, the break-even point is being attempted to be brought down by various cost reduction measures. As a result, the company has made a post-tax loss of rupees 445 crores in Q1 FY22 as against a loss of rupees 897 crores in Q1 FY21. The losses were limited to less than 50% over the same period of previous year due to higher volumes as well as significant cost control and cost reduction efforts. The gross operating margins are, however, depressed on account of the surge in metal prices, leading to higher material cost, and also change in composition of turnover, with civil turnover constituting about 22% in the current year, as against 6% in the last year. The current period EBITDA loss of rupees 399 crores is lower by about 59% as compared to the corresponding period of the previous year, despite non-productive expenses of about rupees 276 crores during the partial lockdown period. But for these expenses, the EBITDA loss level would be rupees 123 crores. The lower losses are also aided by net withdrawal of provisions to the extent of rupees 185 crores in Q1 FY22 due to the improved quality of receivables in the company's balance sheet, as against a net creation for this period of rupees 38 crores in the previous year. The company had net cash in bank balance of rupees 1,623 crores at the end of Q1 FY22 as compared to the opening balance of rupees 1,868 crores. This is a marked improvement over the Q1 FY21 balance of rupees 1,168 crores. The cash deficit in Q1 FY22 is the lowest cash deficit witnessed in the first quarter of any of the last 10 years. The receivables are also at reduced levels, with a reduction of about rupees 500 crores achieved in the contract assets as against the previous year-end figure. For Q1 21-22, the trade receivables are rupees 7,336 crores and contract assets are rupees 23,550 crores and total debtors rupees 30,885 crores. As against at the start of FY 21-22, the trade receivables were rupees 7,213 crores, contract assets 24,079 crores and debtors 31,292 crores. The order booking has been impacted due to delay in order finalization on account of budget cuts and extension of live tenders and delay in procurement of new orders, in announcement of new orders to Q1 FY22. Up to Q1 FY22, we booked orders worth rupees 3,253 crores, out of which power segment is rupees 2,502 crores and industry segment is rupees 694 crores, and the remaining is from exports. The total order book as on 30th June 2021 stood at rupees 1,02,098 crores, out of which the power sector is rupees 84,586 crores, industry sector is rupees 11,187 crores, and rupees 6,325 crores is for international operations. In addition to the above, we are favorably placed in the 2 into 660 megawatt NTPC Talcher main plant package and a number of orders for FGD and boiler modifications, besides the rupees 10,800 crore NPCIL TG Island order already mentioned earlier. Tendering is underway for the 3 into 800 megawatt Talabira thermal power station of NLC India Limited, 2 into 800 megawatt NTPC Singrauli, and 2 into 800 megawatt NTPC Lara thermal power plants. Besides these tenders for FGD of around 30 gigawatt are in various stages of tendering. We are confident that with our various initiatives for consolidation of existing operations, diversification efforts in new growth areas, and forays into futuristic emerging technologies, we will be able to overcome the current challenges. Thank you all once again for joining this conference call. We will take questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Gaurav Birmilwal from Credit Suisse. Please go ahead.
Thanks for giving me the opportunity, sir. Sir, can you throw some color on any progress that's happened on the expression of interest that we floated in May last year?
Well, there we have actually, as I mentioned, we have taken up certain orders for manufacturing in the import substitution orders. We have a number of those orders are there, and a couple of others are in progress, which we will be coming out with in coming months.
Okay, thank you, sir.
Thank you. The next question is from the line of Ajinkya Bhatt from Macquarie. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, my question is the diversification efforts that you are doing, be it on oil and gas, defense, plus the expression of interest with various global OEMs, etc. When you do all this diversification, is there any common thread that binds these efforts together, in the sense that in terms of, say, BHEL's existing capability, is it the availability of design talent, or is it precision engineering, or is it flexible assembly line? Is there any common thread that essentially binds all these operations and makes you confident that you easily enter and succeed all these diverse areas? If you can throw some light on that, please. So
really the common thread we are looking at is an engineering being an engineering organization, rather than being a power sector organization, we are looking at being a large engineering organization with multifaceted capabilities. And for example, hydrogen is the future of energy. So while we have been a major in energy area, that is changing. So from that perspective, as well as looking at manufacturing in the hydrogen economy, that is the area that we are looking at. Then let's say the additive manufacturing again, from the manufacturing perspective, this again is the most significant change which is going to happen in the manufacturing sector in the years to come. And that is why we are already exploring what we can, how we can occupy a place in this sector as a organization which can actually set up an enabling ecosystem for the same. Similarly, when we talk of Industry 4.0, that is related to our power sector, where we are looking at remote monitoring and diagnostic systems for power sector, which can further expand into the range of the process industries. Railways, we are already working in. Defense, we are already working in. So essentially, all these are in one sense or the other related to our ongoing, what we are working on, our positioning at this point in time. So there is a lot of synergy in what we are looking at.
Okay. And sir, one more question. When you floated the expression of interest for global OEMs, or even in your opening remarks, you talked about making an oxygen manufacturing plant after the technology transfer, etc. So if you are going to manufacture something for others through technology transfer, and probably a part of your business starts to work like a subcontractor for somebody else, then I think being the lowest cost producer is the key to success here. Right now, from BHEL's perspective, I think high employee cost base is something that has always been a hindrance to profitability. Is there any thought process about how to utilize the existing talent pool, and how much scale up do you think will have to happen to actually become profitable at the EBITDA level?
So, you see, we are not really looking at being a subcontractor. However, that said, the being lowest cost will continue to be the most important driving factor across for any growth, which is why we have set up all this, the cost control, the cost optimization group and all this. So as of now, we are looking to, you see, almost 70% of our cost is material cost. So that is a major thrust on the employee front, and on the other expenses front, we already made substantial inroads. Specifically on the employee and the break-even, you see, again, we are looking, if you look at it qualitatively, this entire ramp up of multiple areas that we are talking about is related to that as well. And if you are looking at break-even levels, where we would be looking at is almost 30,000 crores is the sort of break-even point for that we are looking at.
Okay, understood, sir. Thanks a lot for your time, and all the best.
Thank you, Mike.
Thank you. The next question is from the line of Ankur Deora from BHEL Securities Limited. Please go ahead.
Thank you for the opportunity. Good evening to all of you. My first question was on actually what you talked about a little bit now, as far as the growth from the other non-power segments. Could you shed some light as to what are your key focus segments for the coming 2 to 3 years perspective, and any sort of targets as to what sort of revenue mix will they be bringing about for the organization?
So, on power, the thing has already gone up in the recent years, and so railways, defense, aerospace, they remain the most important immediate areas, and then what I mentioned about futuristic areas is the other lot.
Sorry, I lost you there in the middle. What did you say as to what was the increase?
So our non-power, the mix has already increased from 20% to almost 30% in the last year. And going forward, the immediate area that we are looking at are railways, defense, aerospace. These are the most important areas that we are looking at going forward.
Okay. Thank you.
Of course, and what we expect more, mentioned about EPC in oil and gas, downstream oil and gas, that's another area that there is a lot of synergy, but it is non-power.
And the second question was the land monetization plan. Could you elaborate a little bit on that? Or what is the organization's thought process there?
Look, land monetization is something we are not really looking at as an organization, because in any case, a lot of the land is on right to use basis from the various states. So that is not something that we are as an organization looking at in any major way.
Thank you.
Thank you. The next question is from the line of Vaibhav Sabu from Axis Capital. Please go ahead.
Hi, this is Sumit Kishore here from Axis Capital. Thank you for reinstating the quarterly conference call after a gap of 4 quarters. My first question is, what is the executable order book right now of the 1.02 lakh order backlog, and what is the number after excluding the GST inflation in the order book?
70,000. So 70,826 is the executable order excluding GST and freight. And what was the other thing that you were asking?
No, so this is the first question. The second question is, what is the gross margin impact of the Atmanirbhar Bharat focus and sort of the import restrictions from China? So what is your gross margin impact due to import restrictions from China and local procurement focus? And what is the sustainable gross margin for the 70,826 crore order backlog?
So I think we would not like to go into giving a specific figure on this. If an immediate impact in the past year, there has been an impact, but over the long period, I think this would rather help us, because we are, this entire Make in India initiative, and to ramp up our own capabilities and production. So I think there are a number of areas that we have to go as it plays, what we'll see as it plays out. But I think long term, this should be something positive for us.
Long term means how many years? 4 years, 5 years, or what is happening in the next 1 to 2 years?
Certainly by next year or so, things should start, that should start happening.
Okay. So the PP Island contract from NPCIL, what is the expected timeline and what is holding back that contract recognition? Because you have declared your L1 sometime back now.
So the price bids were opened in March, and their internal processes for award of contract are on, so we expect that to be finalized soon. The timeline for that is about, I think, 54 months or so. We'll give you the exact figure.
Sorry, you said timeline is 3 to 4 months?
No, about 54 months.
No, 54 months is the execution timeline. In terms of award, you suppose it is
award, as I said, we would expect that to happen in the next month or so.
Sure. And there was a provision for doubtful debtors of 18 billion rupees in FY21. Since you did not have a call then, can you explain what that was for? And what is the doubtful debtor in Q1FY22? Or what is the total provision in Q1FY22?
Q1, actually, there is a withdrawal of
Director Finance, Mr. Gupta will answer that.
There is a withdrawal of almost 185 crore in Q1, if we see the provision withdrawal. So there is no net creation. There is a net withdrawal of almost 185 crore. As far as debtors are concerned, you are asking the number?
So the doubtful debtors in FY21 was at about 18 billion rupees that you disclosed in your presentation last time. There will be no presentation shared this time. Please continue the practice of sharing.
No, it will be shared. Don't worry, it will be shared. The results have just been sent today, so the presentation is also going to be shared. That will be there on our website.
So what were the provisions for in FY21? 18 billion rupees doubtful debtors.
Are you talking about some provision we have created additionally in the year 2021, some 1,800 crore of provision?
Yes, sir.
Yeah, that basically, it was a concern always raised by investors and even by DP also that this a comprehensive review of debtors needs to be done by the company. So in the process of review, we have identified certain debtors, which are doubtful in nature, which were doubtful in nature in future. We thought to provide it last year itself. So ultimately, we provided it prudently and conservatively in the FY 2021. Certainly, but we are making an attempt also to realize those, whatever we have already provided in the book. Provision does not mean that, it's a return off. So efforts will still continue in the current year as well in the future year. But yes, conservatively, whatever prudently we thought, for improving the quality of receivables in the balance sheet, we have provided. So that was a major provision which has given a big hit in the bottom line last year in 2021.
And finally, railway, defense and aerospace have been revenue line items for BHEL over the last 10 years. So what is going to change in the next couple of years? Because I've been covering the stock for over 12, 13 years. So what is going to change in the next 1 to 2 years?
So looking at that, you see now, for example, let's say railway itself, as we already mentioned, we are in the process of finalizing, for propulsion in a much bigger way. Then there are multiple opportunities in the railways going ahead in the signaling side, in metro side, which we are again exploring. Then aerospace, we are looking at tankages to start with. There is that for the PSLV. And thereafter, we are also exploring other opportunities, maybe even possibly looking at integration at some stage. So then defense, we are, Navy has been a major area that we have worked with. So the SRGM which we are manufacturing now we are going into an upgraded SRGM for which a substantial orders are also being are also expected to be in the market. Besides that, we have made a tie-up with Zoraya for marine GTs. So these are the various new things which are happening with which we expect the scenario to change as compared to what you've been hearing about in the last few years. Engineering orders. And as I mentioned, this engineering order which has happened. So you're looking at now pure engineering also. So we are working very closely actually to meet the requirements of various sectors.
Thank you so much for answering my questions and wish you all the very best.
Thank you.
Thank you. The next question is from the line of Bhavin Vidkhani from SBI Mutual Fund. Please go ahead.
Thank you for the opportunity. Could you give us a highlight about the projects where BHEL has been the lowest bidder? What is the status on that? What's holding up? And considering that BHEL would have submitted its price bid long ago, what happens to pricing on those projects?
So the biggest one where we are L1 is, as I mentioned, NPCIL, which was opened in March this year itself. There, of course, the pricing, of course, holds. This is a current price bid validity which is within the bid validity period. Talcher is a longer one, where there have been issues between the local issues between the state government and signing of agreements between the power producer and the consumer. So earlier it was delayed on account of environmental clearances. That also I think now is coming into the final stages. So I think within the next few months we should be seeing some progress on that. We have been looking at the pricing there itself. I think the pricing will still hold. So these are the two major ones where we are L1.
Could you give us an update on the other prospects which you expect to get finalized in the current financial year?
So we've already indicated, the orders where we are L1. We've already said that NPCIL we are looking to have it coming in the next month or so. Talcher we are looking at. Besides that, of course, we don't actually give guidance on this what we are at the expected performance. But these are ones which are visible.
Okay. Actually, I was looking for projects where tenders are expected to be opened or tenders are opened, which can get finalized probably in FY22 fiscal.
So Talabira is the most major one which is in the pipeline. Besides that, for the FGDs, there are a number of tenders which are happening, which are going to be finalized in the coming time. Singrauli and Lara have been in the pipeline, but we don't really have great clarity as to what is going to happen on that.
Sure. Just last question from my side. You did mention about hydrogen.
Yes.
If you could talk more about is electrolyzers an area given the prowess BHEL has in manufacturing, can BHEL get into this? Are there do you have a continuing dialogue with any of the partners on technology side? Any update on that will be useful. That's my last question.
I'll request Mr. Das, our Director Engineering and R&D, to take that.
Yes, it's a good question. As our CMD has already briefed that we are venturing into this hydrogen economy. Actually, there are 3-4 verticals in the hydrogen economy if you look at it. One is electrolyzer, as you have said very rightly. So yes, electrolyzer we are trying to pitch in with some global OEM for tie-up for electrolyzer manufacturing. And also there is a very good opportunity for fuel cell battery manufacturing, which can be given to any automobile industry for any mobile or any static application also. And in that area we have already developed up to 5 kilowatt very successfully compact fuel cell. And now in this year we'll be definitely coming out with the 25 kilowatt cell also, which can be used as a module and ramped up to 200 kilowatt cells in a very compacted manner with a high charge density. And there will be a definite business in future within the country also in coming few years. So these are few areas we are attacking together. And as you know that after all these doing like electrolyzer and all, the major requirement will be green hydrogen. So we have already developed a capability in our R&D at Hyderabad to generate green hydrogen. That technology has been already established, and all this solar power can be converted into hydrogen. And then there is another very big area which will be coming up in the future, near future in the country, that is hydrogen storage. So hydrogen storage tank is a very important area where, as our CMD already briefed, there is a niche technology available. So we are getting into those areas also. So totally it is a bundle in the hydrogen economy, business to target by BHEL in near future.
Thank you so much for taking my questions. Best wishes.
Thank you.
Thank you.
Thank you. The next question is from the line of Abhijit Anand from MK Global. Please go ahead.
Yeah, I just wanted to know on this PLI schemes that have come up, one on solar manufacturing, other on ACC. How is BHEL viewing this? Is BHEL looking to participate in this? Because this is, like energy which we were in for the last several years.
So on the solar, we are looking at, again, we are exploring various technology options. That is a major because you see now with this issue with the BCD kicking in, that now is becoming quite interesting. So there we are working in that area. Advanced chemistry cells also is an area of interest for us, and we are looking at tie-ups in that area.
So basically, in the PLI scheme, BHEL will be participating.
We are considering that at the moment, quite positively.
Okay, thanks. That was a question.
Thank you. The next question is from the line of Girish Achipalia from Morgan Stanley. Please go ahead.
Sir, all the questions are answered. Just one. Receivable breakup, if you can just provide at reduction do you anticipate realistically in this year?
Receivables breakup, and further, what did you say?
What kind of reduction are you anticipating this year in receivables?
So between the center and state, you're looking at the receivable breakup between this. As on 30th June, state utilities are 43%, central PSUs 36%, private customers 13%, and exports 8%. Director Finance will answer the
target means in terms of the number of receivables at the year end.
Yes, sir. Net receivable at the year end, how much would
it will depend basically on two things. One, on the turnover in the top line, what top line we are likely to achieve, though we have kept a good target for the current year 21-22, that is one. And secondly, cash collection to billing ratio certainly has improved in the last year. As CMD has told in the opening remarks, that project-centric approach and that sequential supplies and all those things are going only whatever is required at project side certainly has helped in improving our cash collection. That's the reason, we have the lowest deficit of cash in the last 10 years. Even BHEL, when had a top line of 50,000 crore, the deficit was in the order of 800 and 900 crore used to be. Deficit story is not new to BHEL, it was always there, But only in the current year, this first time we could do and manage with a little deficit. Despite a growth in turnover, debtors have also not gone up. So those are the better controls. Things are in control. But certainly, debtors will depend on the turnover, what we'll achieve at the year end.
I think we would not give any specific guidance on that. A specific figure we would not be.
A number we cannot give right now.
We cannot be giving at this point.
But certainly we are working towards improving this ratio in terms of number of days. That I can tell you.
Can I just ask the revenue guidance, because I may have missed the MOU that you usually sign at the beginning of the year. So good condition, excellent condition, if you can just highlight what is the revenue that you are targeting?
The MOU has not yet been signed. There are some changes in that happening. So that will be released as and when that MOU gets signed.
Okay, but any indication on the top line this year?
I think it would be a little early to give without the MOU, because that is the process the government process for finalizing this target.
Sure, thank you.
Thank you. The next question is from the line of Harsh Patel from Alpha Alternatives. Please go ahead.
Thank you. You mentioned that your break-even is around 30,000 crores. Do you see a possibility of that happening over the next 1 or 2 years? As patient shareholders, we haven't seen profits last 2 years, so we're just curious to know your thoughts on, do you see a path to profitability in the next 1 or 2 years?
Well, that has to be our objective. I mean, we can't be forever in the looking at being forever in the red. However, that said, at this point, we would not like to be giving any specific figures. But yes, that is certainly the target. We don't want to continue to be showing the red bottom line.
The second question is on the land monetization, which was a question asked before, where you said a lot of your land is right to use land. Does that mean this land is not in your name and you won't be able to sell it if you want to? Can you please explain to us what exactly you meant by right to use land?
So what happens is that, when in the older, with the PSUs which are all set up, the land banks which got transferred in the 60s, at that time, these were all transferred with right to use. So yes, what you said is right. We are not in, while we can utilize those land banks for our purposes, purposes related to our operations and diversification and even our, residential and all that. But we cannot sell them off directly by ourselves. Then we'll have to, if it is to be monetized, then there is a long process which will involve the state government as well.
Understood. My last question would be, how do you see the progress in employee costs over the next 2 years?
you see I would like to say, the employee cost is the lowest, what we have reported in 21-22, lowest in last 4 quarters of the quarter one. Already there is a reduction of more than 15% in employee cost. If we look at the employee cost of 18-19, it was 1564. Now it is 1357. So certainly there is a better control of employee cost, but there are certain things which keeps on increasing, like DA increase, or some offset is happening because of retirement and VRS schemes. So we are trying to, and we are ensuring that whatever minimization can be done in this particular employee cost happens this year. So I think it will not exceed the last year level. It will remain range bound only, in the range of 52, 5300, something like that.
We are not expecting any major increases happening there. So that's what I think. That's the answer to your question.
Got it. Thank you. Thank you very much.
Thank you.
Thank you. Reminder to the participants, to ask a question, please press star and 1. The next question is from the line of Meet Vora from DAM Capital. Please go ahead.
Yeah, hi, thanks. So my first question was regarding the FGD orders. So I wanted to know the expected prospect for FGD orders in 2022 as well as 23. And plus, I wanted to also know on the Talcher order, what's the status? How soon can we expect it to get finalized?
Talcher, we are, now it is, as I said earlier, it is coming into the finalization. The environmental clearances have been achieved. Between state government and NTPC also, there's been a lot of movement. So we are hoping to that it gets finalized at least in this year. On the FGD, there you see now with this change in the deadlines, there are the state and those private sector they are still not visible clearly. There is no clarity there. However, there are 30 gigawatt which is expected to be, as I mentioned, which is expected to be in the tendering process. So this includes various. This includes some which have already happened. There have been about 4 or 5 which have been closed in the last few months, and others which were expected to come up shortly. We have been favorably placed L1 in the CPAT FGD, which was the 2 into 500 megawatt, which was where the bidding was completed in June. Then there's another one which has been in the pipeline sometime, for which the bidding was completed in the last year, almost a year ago. This is the Sri Singaji Stage 2. Then for the NPCIL, so NPCIL we already know, that's FGD not. So this is what we have at the moment. Separate FGD group we have created.
Yeah, sure. Thanks.
Thank you.
Thank you. The next question is from the line of Bhavin Vitlani from SBI Mutual Fund. Please go ahead.
Thank you for the opportunity again. So follow up on the FGD, like previous participant. Of the executable order book of about 71,000 crores, what will be FGD in that 71,000 crores?
FGD.
Just one second. We'll just see.
Must be around 15%. I think 7,000. It must be around 7,000 to 8,000 crore. Around 10.
So we are looking at approximately 10,000 crores as about 15% of the order book.
Sure. So in FGD, there were certain components that we were anticipating to import from China. If you could throw light on the execution side, have you been able to indigenize this, and will it have any impact on execution of those?
So there were a number of components, you see, which we have a major share of that we have been able to indigenize. However, some items like gypsum dewatering and there are a couple of items which are still a bit of a challenge, but I think the process is going on for indigenization of those as well. But I think most of them are now under control.
Understand that. The second question is on again receivables as a follow-up. If you could give us guidance on over a 2-year basis, the receivables are continuously running much higher than the revenue run rate. And also an update on the sequential execution, which was focused once when you joined. If you could give us an update on the progress that we have been able to achieve on the sequential execution and its impact on the receivables. What has been the progress so far, and how do you expect it to improve over the next 1 to 2 years?
So as far as the sequential execution part is concerned, I think that's been the most important success we have achieved in the recent past, and that has reflected actually in the quality of receivables, as well as the fact that now for the last year we managed to get 83% of our total billing was converted. So that actually shows the quality sequential execution, as well as sequential dispatch, as well as focus on project execution. So you see that also has resulted in reduction in costs for damages and transportation, etc. The cash outflows, some of the cash outflows are getting controlled. That we have already. So the entire focus today is in the execution is the project centric, and that has helped us on the cash front. As regards to the receivables, you see, this is something which we are trying to bring under control, which is why, in fact, when we have done the detail, as Director Finance just mentioned, we did a detailed review, and that is what resulted in that 1,800 crores provisioning. So there also, besides that, also some of it which was pertaining to closure of projects. So there's another initiative on for PG test and project closures. So those are multiple efforts which are on to bring that also under control.
I want to add one more point in addition to what CMD has just said. Even if you look at the MU target of 2021 in terms of receivables in number of days, at very good level it was 140 days. Was given to BHEL. Though it was a tough target, we have achieved almost 134 days. So it was the lowest. We have achieved very good scale we have achieved last year of the target given by DP. Second thing, whatever trade receivable we have reported this year, in this quarter, at the end of Q1, this is the lowest in last 25 quarters. So certainly, continuously, there is an improvement in the quality of receivables. That is one part. Wherever we feel prudently that the money is not coming or it will not come, we are providing it also appropriately in the books. And third, the focus straightway is on the cash collection. Even we are taking position also wherever it is required. Even to some customer also, last year we took strong positions with our state customers, with our even central customers also. If money will not come, will not supply. So whatever receivables are there, mainly it is because of the payment terms. As you know, we have discussed in past also. The payment terms what we have in these tenders, basically these were all zero deviation tenders. So because of that adverse payment terms in those projects, indirectly we are funding all these projects. Whether it's a Patratu, whether it's a or Tangerco projects, most of the projects we are funding indirectly. That's why it is affecting our cash badly. Otherwise, now it is not that. That's why we have divided in two categories from last 2 years: receivables and contract assets. So if you see the receivables, they are going down continuously. There's a downward trend in the receivables.
And if I can add to that, what we saw as the cash surplus in the last year and the lowest cash deficit in Q1 in the current year, that is all an indicator of this effort.
Sure. Thank you so much for taking my questions.
Thank you.
Thank you. Participants are requested to please limit a question to one per participant. The next question is from the line of Vaibhav Savdu from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. Sumit here from Axis. Sir, NTPC outlined the 60 gigawatt green target by 2032, and they kept their 132 gigawatt target overall unchanged. So essentially, the thermal target went down by 30 gigawatt. Over the last 3-4 months, this change happened. And this was your 6th straight quarter of EBITDA loss. So, I mean, how do you basically, and you yourself mentioned that you need revenue levels of close to 300 billion rupees to get to, the green again as far as the bottom line is concerned. So, how do you basically, resolve this existential crisis for BHEL at your current size? So you have to really scale down your size to, show numbers.
So I think the focus is more on scaling up the revenues rather than scaling down the, while we are looking at, so at the one end we are looking at the top lines growing, at the second end we are looking at material costs, we are looking at manpower costs, we are looking at the other miscellaneous expenses. So those are it's a multi-pronged effort, and I think we are targeting and attacking all the elements. So we are confident that we will succeed.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to Mr. Mohit Kumar for closing comments.
Thanks to the management for having the conference call and giving us an opportunity to host the call. Thank you all for logging in. Would you like to make any closing remarks, sir?
Thank you, Mohit, and thank you everyone for your patient hearing and interactive question and answer session. Thank you very much. Thank you for your interest. Goodbye.
Thank you.
Thank you. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.